Hey guys, welcome. By the end of this video, you understand market structure and profit with it as a beginner or advanced trader. Market structure is simply a series of higher highs and higher lows for a buy trend formation and a series of lower highs and lower lows for a sell trend formation. So we want to buy at discount levels in a bullish structure and sell at premium levels in a bearish structure. But if it was that easy, everyone would have got it. Now, taking a look at this price action, a lot of people expect price to move to the sell side. As we can see, we ran liquidity, broke structure, and now we can see a willingness of price to want to push to the sell side. But let's see what price does. We can see price went the opposite direction of the market. So how would we have corrected that? Same price action, what we want to do is go to a much more higher time frame. And in this case is the 4 hours. So right here we can see price has taken out a structural high and have retested into the 4 hours order block. Hence this particular rejection on this particular candle. Now back to the 30 minutes, we have a much more clearer and better perspective. So now rather than looking for sell objectives, we're going to look for reasons for price to move to the buy side. So let's see what price does. So here we have a bullish momentum candle confirming that price want to push more to the buy side, and we can see price respect an inversion fair value gap before printing this particular bullish candle here. So we can confidently frame our setups and expect to see price go bullish. So let's see what price does, and we can see how price delivered successfully. So here's another piece of price action. So we naturally expect price to go bullish after it trades into this particular institutional swing point right here. But let's see what price does. And there you have it. So you can see how price failed to go higher but went lower. So how would we have avoided this and stayed on the right side of the market? Same price action, we want to go to a much more higher time frame, and in this case it will be the 4 hours. You can see that price sold with a great momentum right here, leading to a break of structure, and with the current price action on the 4 hours we can see a sell candle printing right here. So we're going to wait to see if there's going to be a good reaction at this order block to the buy side or a inversion fair value gap. So let's see what price does. Now we can see a bullish candle close right here after trading into this particular order block. But also on the buy side, we have a fair value gap right here. So let's see what price does. You can see how price trade into that fair value gap and reacted lower, confirming this particular inversion fair value gap. So we want to see price trade away from this area and come back to retest this particular inversion fair value gap. So let's see what price does. And you can see how price came back to retest that area. So we can go back to the lower time frame. Would have gotten a refined entry right here as price traded back into the inversion fair value gap. But we still have a setup right here as price traded into this particular breaker block with this up close candle. And we can also see we have a breakaway gap, which is this two open fair value gap right here. So let's see what price does. And there you have it. So here's a final example. As we can see, a run on liquidity, a break of structure, and price has retested a breaker block. So from here on, we expect price to sell. But let's see what price does. So we can see that price went all the way to the buy side. So how would we have avoided this? Same price action, you want to go to a much more higher time frame. So in this case, this is going to be the 4 hours. So we left the 30 minutes and we are up to the 4 hours. So now we can see that we are currently within a price range, and price has traded aggressively to the sell side into this particular order block right here. And if we want to be very detailed, price has also reached for an inversion fair value gap right there. And you can see the reaction on this particular candle. So let's see what price does. So we can see right here on this candle that price trade into the mean threshold of this particular order block. So let's see what price does. So there we have it. So we can see how price defiled this particular order block, giving us a fair value gap right here. So we want to see price reach into this particular fair value gap and trade away from it. So we can see right here that this candle have reached into this particular fair value gap and also into this particular order block. So let's go down to the lower time frames and frame our setups. So we want to see price reach into this particular fair value gap and trade higher. So let's see what price does. So we can see how price trade past this particular fair value gap right here without respecting the consequence encroachment. So we want to wait to see if there is a defilement or if price just respected this rejection block right here. So let's wait for more confirmation. And there we have it. So we can see our price clear that high eventually. So we can go in right now, framing our setups. So let's see what price does. And there you have it. So you can see our price traded for a while, giving us some measure of profit, but later on came down and knocked us out. So this is part of trading, and that leads us to the next and final point, which is while trading, you want to pay attention to the particular range you are trading within. For example, we can see from this high to this particular low is a dealing range. So you can see our price referred back into this particular dealing range to the discount level and moved all the way to the buy side, attacking the liquidity right there. And from then on, we can see a reaction, a sell candle back into where this high to this particular low, another dealing range. And you can see our price delivered price all the way to the buy side, taking out this liquidity right here. And if you look to the end left right here, we can also see a high, which is another liquidity that price took out after taking out this particular one. So hence this particular reversal that you can see right here. So that was why that particular setup did not deliver completely, because it has already taken out liquidity right here. So that'll do it for today's video. So if you found value in today's video, hit the like button, hit the subscribe button, and see you in more videos.